Hello, Cy here from sunny Sacramento, California. I've been a futures trader for the last 20 years, and I made quite a few of these videos about 3 years ago, but I thought I'd start in making some new ones now that the market volatility has changed since 2020. It's gotten more volatile consistently. In the past, where I was trying to trade for 5 point targets, profit targets, these days I'm going for 20 point profit targets. And so I just thought I would show you the next 3 days. I'll do three of these recordings of the market replay section for the last 3 days and just show some of the techniques I use um, as they would occur in the live market. This is just a recording program from my broker. It's called Market Replay, and it's a great trading tool. I use it for, I just go over each day. Each day that I have a trading session, I'll record the market throughout the day, and then at the end of the day, I'll replay the market replay program. And what it does is it allows me to trade on the recording just as I would on a live market. And it's a great training tool. It's a great tool for demonstrating my method here. And so what I have is it's paused right before 6:30 in the morning as the market would open. Uh, and So I'll go ahead and start it and demonstrate it. But first, let me show you a little bit how I have the chart set up. I'll go into my extended options menu, and what this does is allow me to set a bracket trading. Uh, Bracket trades are when you place an entry into the market. You know, you're long or short. You enter on a buy or sell order. The software will set up a bracket trade, which with a resting sell stop order and a resting limit order. And so let's say if this is the buy bracket for the buy side of the trade, it'll set up a sell limit and a sell stop, which will get me out of the trade in either direction. The sell stop would take me out at a loss, and the sell limit would take me out at a profit. So that's the profit target. And then if I'm selling, it'll set up a buy stop, which is my limit of 20 points, and or my limit of my loss. And the target would be the buy limit order of 20 points. So there's two resting orders on each side of the entry, and you'll see that numerous times as I give an example here. So that's how I set up my buy and sell brackets. And I've got them set to market of touch, which means the limit orders function like a stop order. So if the market touches them, it'll automatically execute the trade at the market price. In this case, since I'm trading the NASDAQ stock index futures, we're trading in points, but instead of price. But I just refer to it as price for convenience. The limit order would normally get you out at your price or better, so it guarantees your price, or in this case, point value, but it doesn't guarantee execution. So I'm more concerned with getting the trades executed. So I hit market of touched, which will automatically go to a market order if the price bars touch that point, if that makes any sense. So that's how I set up the brackets. As far as the charts, I've got two indicators here on the 1 minute chart on the right side, and I've got the 5 minute chart on the left side. It's a Japanese candlestick chart. And on the right side is the 1 minute chart, which I actually enter the trade orders from in trade mode, which is this little icon right here. It looks like a mouse. And so that allows me to trade directly from the charts with this particular broker, which I think they were the first ones to start doing that, to allow traders to trade directly from the charts, which is really fits for what my style is. I'd like to trade the price formations because I'm a technical, or the bar formations because I'm a technical trader, as opposed to a fundamental analysis trader, which would look at the news and then try to speculate on how traders will react to the news stories. And what I do really isn't speculation. It's based on pattern recognition and based on what the price is actually doing. The philosophy behind it is if past patterns should repeat in the future, and so you're actually trading what's actually occurring, not what you're guessing will occur. That's the difference between mainly between a technical trader and a trader who trades by fundamental analysis. So the indicators I'm using are Bollinger Band, which has three lines. You've got the outer Bollinger Bands, which are these gray lines, and then you've got the inner line, which is the center line of the Bollinger Band, which is the 14-period simple moving average. I just call it an SMA line. And so that's what the Bollinger Bands are based on, this standard deviation from the 14 simple moving average. And this whole thing together is a Bollinger Band indicator. And this works really well to contain the range. It's like it envelops the range, so it gives me a good idea for like the boundaries. If you could compare this to, let's say, a tennis court, this would be the fence, and the center line, the purple line here, would be like the net. And so a rally would be from one side to the other in a flat trading range type market. And if it's trending, you'll have a channel one way or the other. And I guess the next indicator I'm using here is the blue 8 EMA line, exponential moving average. And if we're using the tennis court analogy, that would be like the tennis racket. Whereas the price bars here, the black bars, they indicate the open, high, low, close, and of the point values, or price if we were trading a commodity futures, which deals in price or stock. But since we're trading the stock index futures, we're dealing in point values. So, but I just call them price bars for convenience. So to set that, we would go up here to, and that sets the open, high, low, close price bars, or we could set candlestick charts. But for this type of trading, I prefer price bars because they really precisely indicate the crossover points, which is what I'm using on these indicators, where the 8 EMA crosses over the 14 simple moving average. Let's say if the 8 EMA is coming from the bottom side, I would go long at the crossover. From the top side, I'd go short. And the exception with that is within steep trends. In steep trends, I'll just observe what's happening on the bigger picture, which is the 5-minute chart here, and that gives me the intermediate swings, whereas the 1-minute chart gives me the minor swings that are occurring within the intermediate swings. So I'm looking at two dimensions at the same time. And this other indicator down here, if you can see my cursor here on the left side on the 5-minute chart, is the stochastic indicator. And that's really my least used indicator. I use it kind of like a filter in addition to what I'm seeing over here on the 5-minute chart or on the 1-minute chart or the 5-minute chart with the ADMA crossover, I'll confirm it with the stochastic chart, and it works in a similar way. You'll have a fast stochastic and a slow stochastic line, and the crossover points are generally where the market's moving with the fast stochastic. So like if it's crossing over the orange line here, that indicates an up move as confirmed by the green candle. Green means up close, red means down close for the body of the candle, and the wicks are the high and low of the candle. I use the Japanese candlestick on the 5-minute chart because it gives me a real instantaneous view of the direction. So I'll show how I use that indicator. On the bottom here is the volume per 5-minute period, which gives me a good idea of how many traders are involved in that particular move. So large volume means higher liquidity, and the markets move quicker with the more traders there are. So in the starting market on the NQ, which is the NASDAQ emini, you can get up to 30,000 to even 40,000 traders in the opening market. So what I'll do is I'll go ahead and start this, and where possible I'll try to speed it up for the sake of demonstrating. And mainly I'm just trying to demonstrate the entry points. I'm not really demonstrating the time, because I'll just go over 2 hours, and I want to try to speed it up where I can so I don't bore people to death. So let's go ahead and start that. I'll hit the play button. We're going at 1.5 speed here. You can get all different speeds, like up to 100. But 1.5 for some reason seems to be the closest to actual speed of reality. For some reason, they don't have it right at 1. 1 is actually slower. So I think it's just a kind of a glitch in this software. 1.5 is actually a little bit faster, but it's probably the closest to the way speed it moves in reality. So we'll go ahead and start that. And this is what I would have been seeing in the live market this morning. So right now we haven't, this would be the opening bar right here. And I don't usually trade that opening momentum because I like to see what I like to see it establish it at least by the second bar first. And so looking at the 5-minute chart, I'm seeing separation of the ADMA line here. That tells me it's trying to break above that green candle there. So I'm guessing it's going to probably try to move to the upside. And we have that confirmed on the 1-minute. ADMA trying to break upward. So normally this timer would work up here is what I would be looking at, to time the remaining time of this price bar. But for the sake of this, I'm looking at this price right here. I entered that trade by a left click of the mouse on a buy order here. And normally I want to enter the trade as close as possible to the ADME line. The exception to that is on the opening bar, sometimes I'll just try to trade the momentum. For a new trader, I'd recommend waiting until you get a 1, 2, 3 pattern, which I'll show. But sometimes in those opening moves, there's so much momentum, it doesn't give you a chance to get in on the trend. So that's a little bit of a risky move there based on what I'm seeing on the 5-minute chart. I'm seeing that move up. If you see the green candle over here, it's breaking above the wick of that previous candle, as confirmed by the ADMA lines breaking away from the purple 14 SMA line. So that's the, I want to see that alligator mouth opening here. If you can see on the 1 minute chart, how the ADMA line is coming away from the 14 SMA. And so I don't automatically, what I'm going to try to do is cover cost. What I'll do is I'll wait for that reversal bar to occur first if I don't have enough space between my open position line. See, it's saying I've got one contract that I'm trading right now. It's in the trade, but these orders down here are actually resting in the market, and I can move them because they're not executed yet. So this will be my stop loss. And what I'm going to try to do here, when I get this new bar moving through the close of this bar, I'm going to try to move this stop loss to break even. And that'll cover my cost. You can see the first move up didn't hit my target up here, and I'll scroll down a little bit. This would be my profit target. And so let me get out of risk. Right now I'm in a risk-free trade because I moved the stop loss into the profit zone. Hopefully my target gets hit. There I am. That's my first profit. It's showing 410, but in a real market that would be around. It would take out brokers' commissions, and it would take out market the exchange fees, and so it's $5 and something for this particular broker per trade on the NQ contract, the NQ emini, NASDAQ emini contract. And so normally that would be about $3.94, but it's just a little bit of a glitch in the software. Is not perfect, but that's in the ballpark, the kind of money you're making per trade there in the profit window. Now we've got to close outside the upper Bollinger Band. In a trend, that's not as significant, but if the market were sideways, I'm really watching for those closes outside the upper Bollinger Band to start indicating a bounce to the other direction. And we can see we've got a good momentum up by this green candle, and that's going to hit that upper Bollinger Band on the 5 minute chart fairly quickly. See how often you'll get a close outside, and then the following bar will do a little bit of a reversal. On the trends, not so much, and this is a pretty strong uptrend. But you can see why I want to get in these initial trends fairly early, because it's not giving me another opportunity to get into it. I prefer to enter the trades right near the ADMA line, the blue line here, and not enter at the Bollinger Band line. Because if you remember, the Bollinger Band is like the net on the tennis court, and the tendency here is it wants to bounce off that limit, that envelope, like the fence, I mean. So the Bollinger Band line is like the fence, and the tendency is that's like the out of bounds line, and so the tendency is to want to bounce back to the ADMA line in a trend. And the I'm sorry, that's a hard word to say. 8 EMA line acts like a trend line, and it's a really good trend line containing the. In this case, it would be containing the lows of the bars in an uptrend, and in a downtrend, it would contain the highs of the bars. So ADMA, whether the price bars cross that blue 8 exponential moving average line, that's a significant indicator of possible or trend change. And then when you get the whole combination of the ADMA line crossing the purple line, that's a significant indicator of trend change. And in a trading range, you would take one trade each side of that. But when it starts trending, I want to go by what I'm seeing on the 5-minute trend. And I'll start ignoring the crossovers if the trend is real steep. Like if we get a retracement and or pullback, I'll ignore that unless we get a full this 8AMA starts bending over and we get a full curve to that and it starts crossing over the 14 SMA line. Then I'll assume that the trend is probably changing, depending on what I'm seeing on the 5-minute chart again. So the 5-minute chart's a great tool that confirms they work together. It's what I'm seeing on the short-term picture. The 5-minute chart tells me what's happening on the bigger picture. And usually the best trades are when the 1-minute chart's aligned with the 5-minute trend. But then you can also see, you can also trade the pullbacks on the 5-minute chart if the distance from the lower candle to the ADMA line is great enough. I'll often trade the retracements. That's one of the reasons for using the candle. You've got a nice flat surface here where you can see the breakouts. So it's okay to trade the retracements or pullback. They're also called pullback swings on the 5-minute candles, but I wouldn't want to trade the retracements on the 1-minute chart. 1-minute chart, I only try to trade the action swings, which are the swings in the direction of the trend and not the reaction counter trend, because the reaction swings tend to be short-lived and they're unpredictable. But the difference is the reaction swings that occur on the 5-minute chart are seen as trend changes on the 1-minute chart. I'll show you an example of some of that. Okay, now we're getting a pullback. So because this is such a long distance from the ADMA line, see how it's already bending inward? I'm going to wait till that touches that ADMA line and see how that looks. If that's bending inward towards the 14 SMA line, that's an indication I don't want to be long. I want to wait for this kind of pattern where we're seeing. See if the start of this, how it looked like it's angling away like an alligator mouth opening. But when it's starting to angle inward, that's a sign of possible trend change. And I don't want to be trading in the trend at that point. I want to wait for it to move back up into the trend. And I can already see that if that does come all the way back to the ADMA line, it's really going to start angling it inward. So that's kind of how I'm gauging that. I could, let's see, go long here, but I might have missed that trade. But what I'm seeing here on the 5-minute chart is the candlesticks right up against that upper Bollinger Band on the 5-minute side. And so what normally I would expect is a bounce. And this entry point right here, which is at the low of the previous bar, or the close of the previous bar that closed low, that would be my normal entry point, but it's too far away from this Bollinger Band. I mean, 8 exponential moving average line for comfort, and it's starting to bend inward. So these are kind of the subtle cues. We're also getting a little bit of a red candle here on the 5-minute side. See how it's starting to bend inward? I don't like to see that if I'm going to continue a long trade combined with a 5-minute candle. So we're getting a lot of good signals that says wait it out a little bit for it to tell me what it's going to do before getting back in that long trade. But normally that would be my entry point if I was going to look at the next bar here. See how it's the close is lower than the open here. In a up move, that's where I'd want to try to enter the trade on that closing bar or closing tick. But in this case, it's bending it inward towards the SMA line, simple moving average, which is the center line of the Bollinger Band. I think I want to be short. If that were to have enough thrust to come down, let me move that down even further. I want to see it really cross over that line with a lot of momentum. There, it's doing it right now. So normally I would try to trade the close after the crossover, but in the opening market, sometimes this has so much thrust to it or movement, momentum, that I'll miss that initial breakthrough. But I can look at the distance it's fallen here. That tells me that it's trying to move or trend change in the down direction, even though it hasn't made a 1, 2, 3 formation that I normally look for. But this is common in the new opening markets for it to do something like this. So this is not a normal trade entry, but I'm just taking advantage of what I know about opening markets. In fact, we can probably take out some of that risk in case I'm wrong here. I put the cost covering stop. I pulled that down. So now we're in a risk-free trade. I was just counting to see if I have 10. I've got these grid units set at 2 points each that are fixed, and so that shows me volatility at a glance. And so 10 would equal 20, which is my 20 points, which is my target. That's just the way I have the chart set up on the settings. But by default, it's set to auto scroll. So I would rather have it fixed. That way, these grid lines stated the grid lines coming together show me increase in volatility. I think it's going to give me a little bit more profit, so I moved the target down. See, I think it's probably, I was a little conservative on that because it's probably going to drop to that lower Bollinger Band at least. And you see it starting to bend inward and cross over on the 5-minute side. So yeah, so I'm expecting it to hit this lower Bollinger Band at least. And we're trying to cross over the purple 14 SMA line on the 5-minute chart. So this is showing me a trend change over here. Now here, I'm seeing resistance levels. So if we get a break, so this constitutes a giant trading range right here. We've got, resistance levels on the top, and then we've got support on the bottom. So I'm seeing a support level right here. And so I expect it'll probably drop to support and then probably bounce off this area right here. That would be typical. And then give me a chance to enter that trade to try to break through to support. I try to get in of these breakouts in advance as close as possible to the ADMA line, which is like my point. I try to enter all trades as close as possible to that blue ADMA line. As you'll see, as it gets close to these Bollinger Bands, the tendency is to bounce back upwards towards that. Yeah, it's going pretty slow here, so let me speed it up a little bit um, to the next reversal. I'll try to, maybe 10 will work. That's what I'm looking for, that kind of action right there. If that close holds and it's a reversal, then I'm going to look at trading that. Nope, doesn't seem to. Problem is the same issue we had up here. If that comes all the way up to that ADMA line, it's going to start bending. And so I got to use some good timing here because I don't know how many reversal bars we're going to have. I could jump the gun a little bit and try to enter the trade right here. Place my order. I've got it paused right now, but I could enter a resting sell stop right there, and so if it comes back down, it'll put me in the trade. But I'm looking at a green candle here, so the momentum is upward. And ideally, I'd want to enter a red candle with a break below this last body of the red candle. So it would have to come way back down for my entry. And at that point, it would be close to the lower Bollinger Band where I can't enter according to my rules. So basically, that leaves me no choice. I've got to wait for it to come back to this ADMA line. And so that's kind of how I'm judging that. That's, again, this 5-minute candlestick chart is really an excellent tool to allow me to get the timing right on these entries. And the other knowledge I have here is, again, I'm looking at the support, and we can see that it hit support. I'm just drawing the cursor where you see the cursor line here. And it's basically a flat edge where you see the lows of these price bars. You can just take the cursor and see the support really clearly. Also shown by the Bollinger, where these Bollinger Band levels are. So what I would want to do is take a breakout of these support levels. So the ideal place to enter would be up here after it stops its up move at the ADMA line. But I want to try to enter on a red candle if that sequence makes any sense. So I've got all these filters I'm looking at. I've also got an up move here on the stochastic chart in the 5-minute side. And I want to see it come back down through this orange line here. So right now we're moving up towards the orange line, so everything's moving in the wrong direction right now. So I'm hesitant on taking that short trade right here. So all these cues give me an idea for timing, which is hard to explain in writing, but I think if you see it a few times, you'll get the idea. See, now we've got this up move continuing, and see how that ADMA line on the 1 minute side is really bending inward. I don't want to see that before I enter a trade. I want to see it start to come. If it's going to cross over, it's going to continue up over this 14 SMA line. I don't know if it's going to do that yet, but either way, I can't be long because we're below the 14 SMA line. So I'd have to see it, the blue 80 MA line, cross that in order to be on this side of the market. I can't trade this side of the market, the long side of the market, when the 80 MA line is on the short side of the market. But I can't go short because it's moving upwards toward the 14 SMA line on a green candle as we're crossing over on the stochastic chart on this orange line. So I've got, I don't know, maybe 4 signals here telling me don't go short yet. So it's really good with the timing issue. But I'm preparing to go short because I want to take if possible, I want to take a breakout of that support. Breakout trading is really excellent for catching a trend as the trend occurs. As trends that break out of trading ranges are really usually excellent trends. And once you're in a trend, sometimes they're very difficult to get into it. So you've got to take it at the point of inception where the trend begins. So let's let that develop a little bit more. I know if I keep explaining everything, it's going to make a really long video, but oh well, I'll just, for people who are not bored, I'll just, get the information out there. Okay, see how this line is starting to, what I'm looking for is the 80 MA line to start turning back down. And then when it starts opening up away from this 14 SMA line, then I can start considering entering the trade, even if it's maybe a little too late. But I'm trying to capture the breakout of support. There's a thrust down there. Okay. So this is where the decision becomes a little bit hard. What we're actually looking here is we're still a green candle, but look at the 5-minute 8 SMA or 8 EMA line coming inwards towards the 14 SMA line, the purple line. That's indicating a 5-minute crossover to the downside. So that's a good signal right there. But I want to see a little bit more development. Okay. I know if it takes out the low of that previous bar, look how much momentum it's got going into that. So I have it paused here to just, in reality, of course, it's not going to be paused, but I better set the correct speed here. But I want to be in the trade because at that point, if I hit that entry order, which is a sell stop order, and it already set my limit order target, as you can see, the software already sets the bracket trade. If that entry is hit, by that time this 80 MA line will be curving downward again. So that tells me it has momentum into this direction. And what I'm really trying to do is capture the breakout of that support. Okay, so that got me in the trade, but it's backing off. Oh, why did it? For some reason, it chimed twice. That's not a good sound because I don't want to enter a second order here. It shows I'm only in one position. That might have been my email. I also like where it placed the target, which is just slightly below the breakout. So that's a good shot at getting that target hit. it easily hit the target, so I probably got out of that trade way too early, because now it's in a breakout and it's really going to probably start moving here. See how it just broke below that support? Now it's really picking up momentum. Breakout trading is, some traders just, that's all they do. They just trade the breakouts of support and resistance of a trading ranges. So now I'm just doing the same thing. I'm looking for a pullback to that ADMA line here. I could have stayed in this a little bit longer. Probably missed up a little profit, but see, at this point I've got $1,320. It's going to be a little less than that in reality, but I'm not too worried about leaving a little bit on the table. As long as the targets are getting hit, that's mainly what I care about. So, okay, it looks like it's starting to. This was a long move below this lower Bollinger Band here. So even though it didn't close outside the lower Bollinger Band, a lot of times that acts sort of like now it's sort of acts like a rubber band when you stretch it too far. Now it's springing back, and the Bollinger Bands are really good for that, indicating those boundaries. When it moves outside it, you can expect it's probably going to make a bounce, even in a. It's more accurate if the market's flat and sideways. In a trend, it can just continue outside the Bollinger Band, but at this first breakout here, what it'll do is come right back up to where previous support was, and then as we're seeing right now, it'll come up to previous support and then head back down into the trend. So a breakthrough of support, the old support becomes the new ceiling, is the old rule here. I'm gonna try to be short right there. You see that close? That might be entered a little too early. But yeah, I'm in the trade now, so I'm committed now, even if that goes against me. Could come back up to this ADMA line, but see how I entered right at the last close gave me a good point. In the trends, I can get away with entries a little bit further away from the ADMA line, and this has a lot of good momentum, so I'm kind of using that judgment call. But this might have been a bad. Even though I did this morning, I'm just doing it. I'm not doing it by memory. I'm just trying to trade what I did, and I don't exactly remember how I entered these trades, but I'm going by my signals here. And I would have definitely tried to get short right there, which I think I did this morning. And okay, we're out of risk right there. So that was a little bit premature, maybe. I'd like to wait for a reversal bar and then see the market move before through the reversal close, before moving my stop to take out some of the risk. I'll just get that a little bit higher. Yeah, I'm trying to not get stopped out before it hits a target there. It's so close to the target. At the same time, you don't want to continue in risk. Okay, so it's playing with me a little bit right there. I'm doing this in as close as possible to the actual time to show you what the market, how it tends to do, tease you a lot. It plays with your mind if you watch it too closely. That's why when I first started trading, I used to try to distract myself a little bit, because if you get too caught up in this micro movement, you tend to micromanage your trade, and it's easier just to look away for a moment and just let it do what it wants to do and not get caught up in all that little static movement. Okay, so that's really not taken off with too much there. We've got another support area right here, and if this closes up and this makes a peak right here, or it makes a lower low than the previous low and lower than the low that follows, that's another pivot point right there. And if it's a lot of times, if it fails to hit the target, I'll go ahead and reduce the target when I see something like that, because a lot of times it'll come back. Whoop. And in this case, it's not. It's breaking through that. See that number 2 point there? Once again, I got out a little bit too early, which is a good argument for a trailing stop when it's really volatile like this. I wouldn't say this is extreme volatility, but it's good volatility for trading, and you can tell volatility by how close the grid units are, because I have them fixed at 2 points. And the more volatile the market comes, I've actually seen this chart turn gray because the grid lines come so close together, and each of these grid lines are 2 points apart. So my target is set at 10 grid lines, which is just easier to count. And but it's actually 20 points. Let's try to speed that up a little bit. I'm just waiting until I get a reversal close here, like that. So I'll put it back to normal speed here. When I see this this close start to reverse, and it's in a steep trend, I'm going to try to get in on that first close. Now, if it was flatter and lower volatility, I might tend to wait for it to come back to the 80 EMA line, but that's another one of those judgment call things where I'm judging the steepness of the trend, which this is a pretty good trend after a breakout, and it's confirmed by the 5-minute candle. These candles are really moving down, and we've got a movement below on the stochastic chart. We're below the 20% zone, which I've colored this green dashed line. Some people make this red and the other one green, but I colored it green because this is where you'd want to, if it was coming back up through it, that would be a buy. But we're maintaining steady through that green line, which tells me this move is pretty much in progress here with the green candle, even though it's crossed out, it's closed outside the Bollinger Band here, but I'm expecting some more movement down. So yeah, at this point I'm making a judgment call. Wherever this bar closes, I'll try to get short right there. So we've got about 1 second for me to place that order here. So I'll just do it now while it's paused. Okay, so I'm in the trade right now, but a good rule of thumb before moving this profit or this uh, profit protecting stop into the profit zone, which would cover cost, I usually like to see it close about 5 grid lines down. And right now it's reversing on me here. And then by the second or third bar, I'd like to see it close at least 3 grid lines down. And the other way of determining this is to look at the if I get another swing that doesn't hit my target, I like to enter the profit protecting stop loss after it comes back through the reversal bar. Now this bar technically is a close before my entry. So if I'm following my rules correctly, I should move that target to get me out. But yeah, I'm just hoping that I'm hoping it's gonna. This is kind of what I'm doing right here is gambling, which I don't recommend new traders do. I'm gambling that it's going to come back down because of the steepness of the trend. So my timing was a little off in that entry here. I didn't know it was going to make a second up close. And I just hope that doesn't continue up through that 80 MA line. Then I would have to take a little bit of a emergency procedure. Then I want out definitely. But it's so close to that entry that I'm just going to wait a few seconds here. That's what I like to see here. I want to see that come down and take out this number 2 point. So if we had a label here, this would be like P1, P2, P3. And the old P3 becomes the new P1 in the next swing. So this would be the P3 point. And I'd like to see it break out the P2 point right here. That's what I'm visualizing that structure, the price structure, the swing structure in my head. And if this swing had come back 50% of the previous action swing down, that would be a strong sign of reversal also. And at that point, the 80 MA line would be bending upward. And I think the reason it paused here is because as you see on the 5-minute chart, we're getting a close outside that lower Bollinger Band. So it's trying to bounce upward a little bit. And so, yeah, it's a judgment call, and we're seeing the stochastic trying to cross over. So, yeah, these are not really good signs, but it does things like this to make you nervous, which is why I try not to micromanage it. I literally forgot what I did today in this situation. I'm sure I made this trade, but this might have been one that failed. I'm not sure. Yeah, I could speed it up, but I'm just showing the what it does in reality, and you kind of have to sometimes wait these out. So yeah, I know it's boring, but that's just the reality. I want to demonstrate how sometimes it just plays with your mind a little bit, and you can't let that affect you, because all I'm thinking is I've got a procedure. If it were to close above that entry line and a procedure now to move out of risk. So I'll take that trade out of the risk right now. So you see it's pretty close to almost halfway to the target before I took it out of risk. And so it's not immediate that I move that profit taking, because I want to give it breathing room to at least give it a chance to go for that target. And so you see I just hit the profit target there. And so I'm just doing the same thing. I'm looking for the next setup. Yeah. Okay, let's speed it up a little bit, because I'm looking for the reversal bar again. So I'll speed it up. I think I can save a little time by. See, I missed that trade. I could have probably done a second trade right there. Okay. Now what I want to see, we hit that Bollinger Band and it's starting to turn flat, and we've got a big down move on the 5-minute chart. The big wick of this candle here is way below that Bollinger Band, and it's starting to, you see all that momentum is bringing it back up through the close of that red candle here. And so this little, they call it doji bar. It's a Japanese candlestick term. When it looks like a little cross, that doji bar is about to turn green. And so for that, I want to see a number 3 point, P3 point, to form, because the close there is uncertain. I'm seeing a bounce up on the 5-minute chart. And so this time I want to see a P3 form. I don't want to just blindly take that up close here. And I'm also looking at the price structure here. See how this down move is symmetrical with this down move? They're almost the same length as to this down move. So we're right at the point where I'd expect a P3 to form, and so far a P3 would have to be higher than the previous high. And so that's going to put it around the 80 MA line. So let's let this develop a little bit more. Yep. See, that would have been a good decision to enter there, but I just didn't know. So sometimes you miss trades. See at 7:04. See how it made that up close here? I just made a judgment call, and I probably missed a good trade right there. Sometimes you miss them. Now it's starting to come up. Now that's what I was looking for. I was looking for in this kind of formation in this last bar. So what we've got here on the 5-minute side is on the stochastic chart. It's trying to see how it's below the 20% line, which is that green dashed line, and it's trying to cross this orange line, which is. And after that crossover, I'd like to see it cross this green dash line, and that'll indicate a buy signal on that chart. And we're seeing these these wicks down below the Bollinger Band here. So this tells me that this downtrend is ripe for a pullback to the 80 MA line, the line that I have a problem pronouncing. If you look on the 5-minute chart, the next move I would expect is going to be a long move up, big green candle up to that distance to that. See that enormous distance to that 80 MA line. I look at that as like a potential there that's waiting to happen. And you see that pullback to that P3 over here, and then the ADMA line is on the 1 minute side is starting to bend inward. So yeah, there's a lot of signals here that tell me to be a little bit cautious here. In order, I'm going to have to see a P3 point regardless, but in order to take another trade down, it's going to have to start bending. I want a lot of proof first before I take any trade. And so it's better to err on the side of caution here. See how we're getting bend inwards? And we're getting a bounce off that 5 minute lower Bollinger Band. Okay, now it's really no question about it right now. And a lot of times it'll come back and make a P3, or I mean, if we're looking at a trend reversal, there's a 1, 2, 3 pattern, and I differentiate by the 1, 2, 3 patterns occurring in a trend. I call these P3, P1, P2, P3. But the trend change reversal patterns, it's a very common term is the 1, 2, 3 pattern. You hear that. It's one of the first things you learn in technical analysis trading. So I'm expecting what I'm looking for is probably a down move. But if I see a breakout above this candle over here, I'm expecting it's probably going to, that's going to break out on momentum. So I might just go ahead and go long because we're so volatile. I might hit my target just crossing that. As I cross that that purple 14 SMA line, as the price bars cross that, that's another judgment call. Sometimes it's better to wait for the close. On a real low volatile day, I would wait for the 1, 2, 3 pattern to occur first, then a crossover with a close. But because today has so much momentum, I can tell just by the volatility. It's just one of those things you get to know by experience. I can't make a hard, fast rule on that, when to know to do that. It's just based on the volatility, the size of the pullback I'm seeing here on the 1 minute chart. We've got the bounce off the lower Bollinger Band. I'm seeing it confirmed. It's trying to break through the 20% level here on the stochastic chart on the 5 minute side. And we're trying to see a break above that candle wick here on the previous candle on the 5 minute side. I hope it's really tough to make this clear because I don't think I can really describe it in writing. You just kind of have to see it and get a feel for it. So let's bring this back to normal speed here. I'm just going to place my buy order here. It hasn't been hit yet, but it's about to get hit. Now I'm entered the trade on momentum. That's why I like the buy stops. They'll get you in the trade in the momentum in the direction you're trying to trade. So the target's well below that upper Bollinger Band line, which I like to see, because I usually you can be pretty sure it's going to get up to the Bollinger Band level on these reversals. And I'm still expecting it to come down and make a 1, 2, 3. I just don't know. I'm betting on enough volatility before it reverses again and makes that 1, 2, 3 pattern. Okay, and because I'm expecting to come back down, I'm hesitating about moving my stop loss here, so I'm in risk right now. But I like the direction it's moving now, so I'll go ahead, cautiously take out the risk. Whoop. That's the other thing. You get these pop-up windows right when you're in a critical moment. Oh boy, look at that. Just hit the target, but did not take it out yet. That's a thing that happens in reality as well. It's uncanny how it sometimes does that. And it'd be very disappointing to take me out of my profit covering stop loss, but it's better than taking an actual loss. At least I've got it covered. So yeah, it plays with your mind. Finally, okay. You could actually see the momentum come into that. And a lot of these times you can see momentum in the live action, whereas if I just took a screenshot, you can't really see it. Okay, so now I'm just looking for the same thing I was looking for in the downside. Uh, Same stair-stepping 1, 2, 3 patterns. And so I want to see a reversal bar here close to the ADMA before I enter. So I'll just speed that up again. That looks like a reversal bar here. Okay, let's continue with that. Uh, Paralysis of analysis here. Obviously I wouldn't have time to do that in an actual trade, but let's see what I want to do here. Is it what I'm questioning here? Is it done with the down move? That's the worst thing I want. So yeah, I just got in it. See what I'm fearful here is if you look on the 5-minute chart, I don't want it to re-enter the downtrend on the 5-minute side. Because what I'm trying to do is trade the retracement uh, on the 1-minute side of the downtrend that's occurring on the 5-minute side. So I'm afraid of that downtrend resuming on the 5-minute side, even though the signals are to go long on the 1-minute side here. So now I'm looking at a loss. And so the procedure here is let's just get out of this trade. So I moved my stop loss here to break even. And hopefully that catastrophic loss doesn't get hit first. Yeah, it looks like it's going to hit. So that's my first loss of the day. And yep, that's that was that's the problem with that. You I saw what was happening here on the ADMA. It's starting to bend inward again, and my timing should have been a little bit better here. I still think it's going to break above this body of this green candle to the upside, but let's get in on it here. And now I'm just making up my loss I just had, which is a waste of a perfectly good trade. But yeah, that's the nature of the beast. You lose some, but the trick is to make the losses where the catastrophic loss is much more rare than getting out at break even. You can see I set my break even stop as soon as I had a close below my entry, and um, that was the right procedure. It's just that it didn't hit that break even stop before it hit my catastrophic stop loss. There is what I call the initial stop loss. So right now I'm in the same position. I still haven't moved to break even yet, and I'm hoping the target gets hit. Now we're over 50% of the distance between the entry and the target, and I'd like to see it close above that point, even if it doesn't hit the target. And then as we get close to the close of this bar, and the close is still above where it is now, I'll move up the stop loss to cover cost here. So all we're doing now is just making up for that past loss, but oops. I should take my own advice here. Oh man. Okay, I missed that trade. I moved up the cost covering stop loss too soon. That happens too. Let's just get in on it here. See the risk. You can see it got riskier because what I'm trying to do is trade that retracement uh, of the 5-minute chart here, and I just screwed up 2 times. I was correct, but my timing was off. Um, I was a little bit better judge in the real trade, I think, today. But it's good to demonstrate this when you're wrong, because that's just the reality of sometimes you're going to be wrong, and just the nature of it's the name of the game, to be right more than you are wrong, and then to cover the stop loss or cover the cost, and so then you end up making profit. Now we're on the right track here. I entered that trade far later than I wanted to, but I was just hoping that the up move, because of the volatility, have enough room to hit my target. It looks like it's trying to. And I didn't even move up the stop loss to break even there. I should have that was the correct procedure. So yeah, that trade just had a bunch of screw ups to demonstrate that I am human. I do make these mistakes. But when you're sitting on a $2,550 profit, who cares? You can afford to make them. It's just that you don't want to do that right at the beginning of the day for psychological reasons. Okay, so let's speed that up a little bit, and we'll look for the next retracement on the 1 minute chart, and I'll try to get it in at the blue line again. And let's see if I can avoid getting burned like I just was burned before. So I have to wait for this next price bar anyway to take me into the trade at this close. And I want to trade right on that line if possible. Got a red candle on the 5 minute chart, so that's not a signal I want to see here. And we're bending inward on the ADMA line on the 1 minute chart. And so these things are keeping me from going long again because you saw how painful that is, getting the timing wrong. So these signals are very important, and I'm aware of what I'm doing on the 5 minute chart, which is why this is such a great tool to have. Because it gives me the bigger picture. I see I'm trying to rebound off that 5 minute ADMA line, and we've got a downward stochastic trying to cross that orange line back to the downside, so that's not a good signal, but I like that thrust in that direction here. I'm just going to go ahead and preset that stop order. See how I didn't set it right at the close, but I set it based on the idea that that thrust is trying to get me into that up move. Still on a red candle, which I don't like. But I'm anticipating a break above that green candle on the left side here. So ideally, I try to enter the trades at the close. But you see why I didn't do that here, because we had the ADMA moving down and we had a red candle. So I want to make sure at least the line is the ADMA line is parallel with the 14 SMA line. And I'm banking that it's going to try to continue the uptrend, even though the Bollinger Band is looking flat. So there's a lot of anticipation that's going on here. I do remember what this did earlier, but it's still, I'm just trying to go exactly by the book of what my signals are showing me and how I would actually trade this a live market. Tried to drag it there. I'm just going to hold off a little bit and taking out the risk. My first tendency is I'd really want to get out of that risk as soon as possible, but I want to see that close a little bit higher before I do that. Okay, we're definitely can take out the risk right now. We're almost hitting that target there. Sometimes you'll get it right up to that target, like it did it again. Just hit that target, and then it'll come back down and take you out at your cost covering stop loss, and that's really disappointing. But it beats having a loss. Okay, now I'm going to want to see it come back down to the 80 MA line again. Kind of do the anytime I see a pattern like today, it's really trying to come below that 80 MA line, and I think the reason for that is because we're really trying to. It's really not in a 5-minute uptrend yet. We're trying to trade this slope back up to this crossover point on the 5-minute chart. So it's really hesitant to bounce off the 1-minute 80 MA line. And so, yeah, I'm really cautious, like right there. Um, yeah, see, that 80 MA line's just wanting to bend downward, and I'm still seeing a red candle over here on the 5-minute side. I'm still seeing that red candle, and that's what's got me not taking that. This would be normally my entry point here, but I've been burned before, so I that's what's got me concerned too. I keep seeing it come back down and turn that 80 MA inward, and I know from this previous pattern here that is tending to do that in this uptrend. It's tending to come below that 80 MA line and hit the 14 SMA line before bouncing off that. And look what it's doing here on the 5-minute chart. Definitely a red candle trying to curve that back down into the downtrend here. Now, I'm showing this real time, even though it's a little bit boring. But yeah, it's hard to fill these silences, because I know we all like entertaining videos, but I'm just kind of doing this for informational purposes, and that's not always really exciting. There's really no way to do this in real time, but I want to show the real time problems you have, and as close to the real time as you would have in the live market. Okay. I don't want to go if this were to cross over and go in the short direction again on the 5-minute side, I would need to see a lot more development. Like, for example, I need to see that 80 MA on the 5-minute side bend down and start opening away again. And I would need to see a breakout below that red candle here. But so I might miss a short move here. But I'm trying to be as realistic, as cautious as possible, because I don't want to give a new trader the idea that yeah, I want to give a real good sense of what the actual risk is. And so if you're going to be cautious, you might miss a few trades. Nothing is 100% efficient. But what I'm trying to do here is what I'm I'm trying to trade the bigger picture that I see occur on the 5-minute chart, and I'm seeing that ADMA on the 5-minute side start bending inward. So that tells me it's trying to make a trend change, and I suspect that this red candle here is trying to make a number 3 point on a trend reversal for on the 5-minute chart. Because look at how far this pullback has occurred right now. It's trying to cross over to the upside here, even though it's on a red candle. Okay, so now we're getting that up move on the 1-minute chart, but I'm still not liking it because I want to see it start separating away from the 14-minute side here. I mean, it's hard to speak and think at the same time, but for me it is. But yeah, see how narrow it is. The ADMA is so narrow to the 14 SMA line. I want to see this start opening up away again before I can confirm it here. And I'm seeing a red candle there. So again, I might have to enter the trade a little bit late in the channel. And what I'm seeing here on the Bollinger Band is a restriction. And I don't like to enter trades on restrictions normally. So this is a real judgment call on whether to enter this trade or not, because I could be stopped out at the upper Bollinger Band here. So let's wait, see what it does on the next bar here, and I'm going to try to capture this momentum upward here. So I've placed the stop order as a resting stop, and it's going to get me into the trade here. And yep, I'm hoping it turns that Bollinger Band. See, where you don't want to trade is when it starts to narrow. But the idea is to get into the trade as it starts to widen out again. So that's what I'm trying to gamble here. That it's trying to break out, or it's trying to cross over on the 5-minute side. And we're on a green candle, so that's a positive sign. The way these 8-minute lines work is sort of like a sine wave, and you can see the amplitude of the sine wave is down here, and then it wants to create a sine wave to the other side of that purple line, 14 SMA line, and so it ends up looking like a strand of DNA. But now I'm very confident because we got some distance here, so I'm going to try to move up my cost covering stop loss here and not get that stopped out too early. Trying to get my target hit. See what we're looking at here on the 8-minute the 8 EMA line. We're looking at it starting to come upward from the 14 SMA line, like the alligator mouth opening. I always use that analogy. Kind of corny, but it's just that angle here is what I was looking for. And at this point, it was really subtle, but that's what I want to see. And that indicates a continuation of the uptrend, whereas if it had crossed over and started opening up on the downside, that's a down move. So by this time, people are probably passing out from boredom. But I'll just make this purely educational video. I know the production values are extremely amateur, but I'm just trying to be as real as I can and just get the information out there in case somebody wants to reference it. I don't yet know how to make a slick video that's really with really good production, and I'm trying to speak and think at the same time, and sometimes my words don't match my thoughts, so I'm finding that's hard to do. So people who make these YouTube videos are really, I realize how hard it is. You know, it's not an easy thing to do. But what are you going to do if you're going to have a real information video, or do you want a really polished video? I guess that was my choice there. So I thought I would just get the information out there for reference, at least. Okay, so let's get the next retracement here. I'll speed it up till we get the next retracement swing. So I've got it sped up to 20, and that could be a possible entry. But yeah, I don't like the distance from the 80 MA line. How that, if it were to drop all the way to the 80 MA line, it would start to curve inward again. I can already anticipate that. And so that tells me I probably don't want to be long this close to the upper Bollinger Band, although you can get away with that in a longer trend. But another thing I'm looking at here is the distance from the, let's say if we start on the left side of this 1 minute chart where my cursor is, if that's number 1 point, that's number P2 point in an action swing. P3, what I'd want to see in the following action swing is corresponding, proportion. So from this point to here, I'd want to see from this point to here, but this is what I would call a failure swing if it hadn't broken out the number 2 point here. So that's a really long reaction. That usually indicates a reversal. But here we're getting the opposite. We're getting, now it's resuming the proportion of the previous two swings combined. So this tells me right up here we're probably at the top of this. It gives me a judgment idea of how far it's probably going to move before we get a good reaction down to the 80 MA line. It's in proportion with the previous swings up is what I'm trying to say. So let's see how far that's going to drop here. Might not get a drop, so it might force me to make a judgment call. See, in real time, you're not going to have this pause feature. So, yeah. If that's a trade, I'd probably just missed it. But maybe I don't want to be in that anyway. So let's slow it down a little bit so I can try to catch it. I'm looking for a reversal of this close here. And see, we're at a crossover point on this 5 minute uptrend on a green candle, so that's what has me wanting to do this. Let's just go for it. If I'm wrong, I'm wrong. It looks like I'm wrong. Already I can tell that was a bad, see I entered at the up close here. I just wanted to get in on it. So that was probably not a smart move here. Because look how far away it is from the 80 MA line. And and it's right in the it's over 50% of this upper Bollinger Band channel, and that's usually not a good area to enter. I want to enter it close to the 80 MA. There's a good chance that could come back and spank me here. Okay, so I just put it below the P3 point because that's natural support at this area. And if it were to come below that, it would show a real reversal where I want to be out anyway. So I took out some of the risk, but it's still going to hurt if that gets hit. Now we're getting the reversal bar. And the technique anyway is to, let's say if we get a reversal before the target is hit, the technique here is for the next bar to come above, let's say 2 points above that close. And at that point, then I would, no matter how close it is to the entry area, I'll move the stop loss to break even. It's just another technique in a trend. But I see that this trend is kind of waning here. I always get cautious when you get an old trend and it starts to, you get at the peak of this curve where it starts to want to curve back inward. That point always makes me a little cautious about entering a trade here. So I'm getting ready to try to get out at the stop loss here. Is it going to let me do it? So what I'm looking for is I want this to come back up through this previous close. And if it does that, I'll move that stop loss as soon as possible to break even. But yeah, I'm just going to put my stop loss down here. I don't want to go back below the original catastrophic stop, but right now at this point, I'm just going to try to get out at cost covering right here. I've moved my target down to the cost covering area. Yeah, it's really bending inward, so that's not a good sign. That's usually a sign of reversal, as a matter of fact. Oh boy. I don't want to take another loss. No, this is where you sweat a lot when you make these kinds of mistakes, but you can see I was hesitant all the way through here. And so I kind of knew better than to do this, but looks like it's going to get me out, cover cost. Come on. You big jerk. Actually, I say, you little shit. Comes right up to my cost covering target, and could it get any closer? This is what I mean when it plays with you psychologically. If you try to watch the micro movements. Come on. I'm not too worried. If I'm sitting on a profit, I don't really sweat this stuff. Um, but if you do this at the first moves of the day, psychologically it can be a bit unnerving. But you just got to stay with it. Um, can you see how it just came right up to my cost covering stop, and it didn't get me out? So a lot of times you can get nervous and say, "Well, I just want out," and um, that's what it does. Then just before it takes off in the right direction. So it's going to make me wait. So that's another gamble. I've got my catastrophic stop loss right below natural support at this point here, and if it drops below that, I think I'd want to be short. Mm, yeah, it's going to get hit. Now that was agonizing. I'm showing how to lose. Don't take notes on this part. I'm not interested in taking the short trades here because look at what we just did on the 5 minute side. We're in an uptrend actually in the longer term view, but we're in a 5 minute retracement swing back to the 5 minute ADMA. So I'm going to decide not to take that short trade. As the crossover would indicate on the 1 minute chart, it's saying go short here on the 1 minute chart, but I'm looking at the bigger picture here, and the 5 minute chart is trying to cross over into an uptrend, but you can see it's just falling back to the ADMA line. That's all it might be. It's just making a 1, 2, 3 pattern here, but the next candle might shoot up. So that's what I'm expecting to see. You can only trade the side of the market where the blue line, the ADMA line, is on. And if I try to go short here on the 1 minute chart, I'm probably going to get burned a little bit. And I've had enough of that for the day, so I just want to make sure I'm on the right side of the market here. Let me show one more success at least. Kind of end the trading on a good note. Might as well speed up this area because I know I'm not going to take the short areas. So I'll just try to speed up through this. Okay, that's what I'm starting to look for. And I want to make sure I'm not in a trading range right here. Those can be, if you're looking at a real narrow trading range that doesn't hit your target each side of the blue line, and it's moving sideways, the Bollinger Bands, you don't really want to get caught in that either because that's a whipsaw. That's what they call the whipsaw area. I guess a whipsaw is a type of saw, but that's the old term for it. So I'll just speed this up a little bit. I forget that I'm recording myself, so I'm just thinking as I should be talking. Okay, I want to see that blue line cross to the upside, and I want to see these Bollinger Bands start to bell out again. because right now it looks like it's in a congestion area here. I would say that's a support, but I want to take the breakout of this congestion. Let's pause that a little bit. See, I'm biased because I suspect that we're in a 5-minute uptrend. The intermediate swings are here. They want to move up. We're just at the ADMA line on the 5-minute chart. So I think it's going to, see how we've already made the low in this candle? So that would be like a hook or a 1, 2, 3 pattern. And what I want to see is that the next thrust up as it bounces off this 5-minute AME line. And we've got some good distance to the Bollinger Band up here. And that would constitute a breakout of resistance on the 1-minute chart. So that will be my entry point right there. So yeah, I'm considering of putting a buy stop right there. So I'll just go ahead and do that. Let's put a buy stop right here because that's a breakout of resistance. Don't worry about that. That's not active yet, so it's not going to hit that stop loss order. That's just kind of a faded view of where it's going to place it once this buy stop gets hit. Yep, there it's hit. Okay. Now we see the Bollinger Bands are belling outward. And that's a good sign right there. And so I'm trying to get that. See, I'm thrust here on the, wait a minute. I've got it set too fast. The market's not actually going to move that fast. I still had it set to 20. So let's set this real time. It's much easier to see when it's sped up. But now I can move my risk out of that trade and make up for my previous loss here. Okay, so got that target hit. Could have been more profit, but I just had 2 major losses today. But we're trading the statistical odds, and as long as the statistical wins are greater than the losses, you've got a profitable business. And as you can see, we're using all these techniques to put the odds in the favor by reading the direction, by cost covering on the stop loss. All these techniques put the odds in your favor. Okay, so again, I'm looking for the same things, and it's not always this character in every day, but in this day in particular, it tends to the entry points tend to trade through the ADMA line in the direction of the trade, rather than on some days you'll just get it'll come close to it and then bounce, but today it's moving through it and then back up through it. So I'm observing these little characteristics that are sometimes they're a little bit different for each day. And also we've got a red candle here, and we've got a ADMA line bending inward. So I'm going to really be patient and wait for it to look like I want it, because I want to end this on a good note here. Okay. So I'm really going to be picky. Even if this comes back up, I can't enter here because This line's bending inward. 80 MA line's bending inward. Still bending, so it's really confirming it here that I don't want to be long. Got a red candle over here. So just have patience and wait for that to hit that 5-minute 80 MA line and then start to move back up in the direction I'm trying to trade here, which is a long trade because we're in a 5-minute uptrend. Even though it's a little bit of a shallow trend, it's still on the upside of the market. Okay, that might have been a good entry here, but I'm not going to do it. I'm going to have discipline and wait till it looks the way I want it. Still have a red candle here. What I would be doing in a live market, this timer would be more accurate. Right now it's showing me what the market is doing, but it's not accurate to the replay. But in a live market, I would be looking at that countdown timer because I want to trade the next candle up through the close of this 5-minute chart here. Okay, so if this starts bending upward, which it will be if it has momentum, it takes me through that line. Probably set it too close here. See, now it's starting to bend that trade upward. I'm anticipating the breakout of this previous green candle. By the time it hits that top, this red candle will turn green. So there's a little bit of anticipation here involved with this, and so it's always a little bit risky at the entry point. And the idea is to get out of risk as soon as you can, but those initial trades are often a judgment call, and you can see it's turning against me here. I should have entered at that close, but so this might be a timing issue. Yeah, it would have got me in here anyway. So I'll let this be the last trade right now because I know I'm running a long video here. But yeah, I just want to show some of these things. I might make a couple of these like a two-parter, so just to make it more tolerable to listen to, because I know I'm droning on here. Okay, just let me have a good trade, please, so I can show it. That's the thing I used to do as a new trader. The market would just take its time getting somewhere, and so I'd say, "Please God," you're down on your knees praying, and I stopped doing that because every time I do that, it does the opposite of what I want. So I found the best way is just to distract myself a little bit and just let it do its thing. It's either going to close below this opening or close below this average position line is what they call it, which is my entry point. Or it's going to come somewhere close to the target and not take out the target, at which point it gives me an opportunity to cover cost. So only one of those outcomes is really hitting that stop loss first. And if you're trading with a trend, you've already got those odds in your favor anyway. So that's the whole idea. Even if it doesn't hit your target, at least you're in on the trade for when it does. And so I'm debating right now whether to take out my risk. but I don't want that. I haven't seen a reversal bar yet, so I'll take out a little bit. The objective here is you don't want to have your stop loss taken out too prematurely, as I've done that a couple times. But at the same time, you want to get out of risk as soon as you can. So right now, I'm just trying to get this get this target hit, so I can end on a good note. I'm being ultra cautious and moving that stop loss up. So right now we're in a risk-free trade. And we'll just let it play itself out. It's either going to hit my target or hit my cost covering stop. So either way, it's not going to hurt too bad. I actually like being in this position right here, is where you can just kind of relax and just let it do its thing and not worry about it. But as the day goes on and the volatility kind of dies off, you can see these price bars, they become shorter, so it takes longer and a little bit more patience to just let it move. I say that in having made $3,500 in an hour and a half, and I think that's a pretty good hourly wage for most people. So I guess it's worth having a little patience. Come on, just do it. Just do it. It wants to hit that target. Oh boy. It's almost like it has a consciousness. It knows that you're watching it. It's like it knows where your target is. But I know that's just a paranoid feeling you get sometimes. So look at how close and it does this in reality all the time. It comes right up to your target or something, and then it'll take you out at your stop loss. Loves doing that. That either means I don't have the target set right, or uh, according to the volatility of the market. But yeah, it's just going to play with me here. Something like this. Now, if it came back up on the next swing without taking me out at my profit covering, cost covering stop loss, if it came back up and didn't take me out at that number 2 point, then I'd move it to 5 points. But look, it just took it out. So now I'm happy camper, but it'll probably just go on to shoot up because we're only in the middle of the 5-minute Bollinger Band upper channel here, and it's likely going to go up till it hits that upper Bollinger Band on the 5-minute chart. If you see where my cursor is, and so it's an argument could be made that it's probably better to use a trailing stop loss, but I'm also seeing volatility decrease, and so it's better to just take the profit when it's there instead of let it. That's my feeling anyway. Instead of using a trailing stop loss, Anyway, it's been a long video here, but I think I'll just end it right now. And so I'll go ahead and exit out of this. Thank you for listening.